Today we'll be talking about Bartley Vue. As you know, it's probably going to launch this weekend. The check collection is actually supposed to end today. But anyway, so since this is the newest in thing, let's take a look at it from an investor's point of view and see whether is it worth to sink your money in if you are an investor. Of course, there are other factors like people buying near the school, blah, 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 near MRT. If you are the kind that actually look for MRT and also for the school, then probably you don't have to listen too much to what we have to analyze over here. Anyway, as a disclaimer today, as usual, it's all based on my point of view. It doesn't represent any other's point of view, and hence, this is just based on my research and my, I would say, yeah, my my gut feeling now. All right, let's proceed. For those of you who are not very familiar with the Bartley Vue area, let's take a look. The area has quite a few major developments. For instance, I think most of you who have been looking at the Bartley Vue for the past few months, probably you would have noticed Bartley Ridge, Botanic at Bartley, Bartley Residences. So these are the three major developments, condo developments in the area. And of course, people usually buy here for this school over here, and also for the MRT, because it's all walking distance, definitely a walking distance. Of course, from Bartley Vue is a little bit further away. I would say maybe about 5 to 7 minutes away. Then again, if I'm not wrong, I think it's mostly sheltered. Okay. And there are also a few other developments that are still selling. One is Gazania and then Lydium, but both are freehold, so let's not talk about it yet. Let's dive into the fundamentals of the Bartley Vue. The site area is 4,066.666.6 square meters. The lease starts from 13 April 2020. So we are just barely 1 year plus into the lease, so which is fine, totally fine. And total number of units we have over here is 115 units. And that means if we examine this from a more macro point of view, this is actually what we call a small development. Okay, we'll talk about it a little bit more. For those of you who are wondering and not very clear, you might want to go to my Facebook playlist and then or rather my YouTube playlist, and then go and search for a video on this. I think let's not talk about this too much today. As usual, let's dive into the supply area, the supply factors for the area. We have quite some condos, but most of them are small condos, so not much of an issue to bother about. And then let's take a look at this is the 1 km radius. They are usually used as a gauge. It's not a definite rule. It's just that what I used to gauge and standardize in my analysis. Of course, you can vary the distance if you want to analyze a little bit more. Why I use 1 km? Because like I mentioned, usually if somebody is looking for a development, they don't just look for the condo that you are in. They also look at surrounding areas. I would say maybe up to 1 km, because 1 km is still quite a reasonable distance. It is not as cluttered as some of those that we have analyzed recently. So you can see some over here, and then this part is more of I think industrial area. Okay. So therefore, anyway, I zoom in to all these developments and count out how many of them are there for in terms of total units, and then we added up. This one gives us a total of 2,000 plus, because these three are the main major developments over here, and including Bartley Vue, that will give us 2,616 units. As for the smaller developments, we add up to a total of about 800 plus, including Sky Green at the bottom of the 1 km radius. And that will give us a total of 3,000 plus. So from a more macro point of view, a threshold we usually use around 5,000 units, and hence this one is not as oversupply or cluttered as usual. So finally, one that has passed the supply test for quite a while. For those of you who are cheering, oh yes, Bartley Vue is the one. Yeah. Okay. Anyway, let's move on. People usually buy here for school over here, primary school, And then, yeah, I think let's not talk about this. I think this is quite straightforward. If you're not buying for school, then okay, Then you really like the Bartley area, okay, but if you are buying for the school, you already know what to expect. So I shall not touch too much into this. These are schools within 1 km and then schools within 2 km. I didn't really use the Bartley View as a radius because there's no buildings over here, so one map cannot recognize. So I just pluck out the nearest landed piece over here and then use it as a gauge lah. But I mean, don't just it's always better to check with MOE directly lah. Anyway, if we dive into the master plan, let's see the surrounding plot ratios for Bartley, which are actually 3.5, and you have Bartley Residence 2.8, and then Botanic at Bartley is also 2.8. So the highest plot ratio over here in this area is actually Bartley Ridge. And for those of you, all the RCR, OCR fanatics, you realize that this line actually separates the RCR and then the OCR, which is quite irritating for those people who bought into this or looking at this, because they will be considered OCR, whereas Bartley Ridge is actually RCR. I mean, just for information, although I don't really think it will really affect the prices a lot. Later we'll take a look. And hence, Bartley View is still considered RCR. And this is the MRT over here. As you can see, the piece of land is very, very small compared to the rest. Okay, and this is Lydium, this is Gazania. So I plucked out a few developments to compare the newer ones, because I didn't pluck out Bartley View because it's still not launched yet. There's very, very little data for us to compare on the chart. And hence, why I pull out these three, because these are the major three competitors if you are to buy into Bartley View. And the other two are Gazania and Lydium. Of course, these two are freehold, so it's a little bit of a different league. Whereas the other three are 99 years. But why are they all comparable? Because they are all very young. These three are very young. They are all, the oldest one is Bartley Residences, which only TOP in 2015. Bartley Ridge 2016, Botanic at Bartley 2019, Gazania and Lydium haven't even been finished yet. So let's take a look at their price performance. And we see over the past few years, after 2013, Bartley Residences actually kind of stagnate. Same goes for Bartley Ridge, stagnate. Then as for Botanic, it seems to still be going up. Why is it so? It's not exactly going up by a lot, but why do I think it is still going up? Because it's probably the newest kid on the block. Okay, in the area, it is the newest kid, and then it's quite a big development, and hence people don't see why I cannot get in, because it's a very nice. I mean, to be honest, I think in my personal opinion, the one with the nicest facade in the area will be Botanic at Bartley lah. I mean, it's just my own opinion. It doesn't mean anybody else's opinion. For those of you staying in Bartley Ridge and Bartley Residence, please don't be offended. Okay, this is just my opinion. I don't want to repeat again. Then the other two will be Gazania and Lydium. Both are freehold. They are priced above the rest by quite a bit. Okay, but if you take a look, Bartley View has already indicated that they want to launch at an indicative of 1,007 PSF onwards. And I think based on today's market, where RCR are generally trading at above 1,008 and to up to 2005, 2006. I think one per bag is trading at 2006, 2008, up to there. I don't see why developer wouldn't want to go an average of 1,800 to 1,900 PSF. Okay, I think 1,008 will be the mid 1,008 will be the average, I would say, and hence I drew out this line over here to indicate that probably this is Bartley View for average. So if you take a look, the nearest, the youngest competitor over here that is completed will be Botanic at Bartley. So there's a difference of, it was launched in 2015, and then there will be a difference of 6 years apart. If 6 years apart is enough for you to justify, I would say a 200 plus PSF, which is, I think is okay, it's reasonable, it's okay. I mean, it's much better than the Cocoa Palms example. But then again, my concern is that it is not really an apple-to-apple comparison. Why? Because remember, these three guys are big developments. versus Bartley Vue is a small development. So it is not an accurate apple-to-apple comparison. And hence, it is very hard for us to just plot it into a graph and then compare directly like this. Whereas it is, when it comes to land space, it is more similar to Lilium than the other three. Okay, if you take a look, this is the Lilium's land size, and then if you add this up, this is Bartley Vue. Okay, this is not even Bartley Vue. This is not. This, if you add it up, is pretty much about the same. And I calculated before. Lilium is, I think, if I'm not wrong, slightly even bigger. Okay, but they are all within vicinity and definitely within walking distance. Okay, over here is all within walking distance in this area. So if they launch at 1,008 for a small development, I would say, to be honest, I am not very confident in this project. Okay, why? Because if the gap over here for freehold, Gazania has a much larger land effect, then I don't see why I wouldn't top up a little bit more for freehold. Okay, but then again, that can be your that is my point of view. It can be very different from yours. So that's what I think. Anyway, let's move forward. This is the video of this is the video that I've done a few months earlier about small versus big development. So I'm not going to touch on this today. Just go to, if you want to find out a little bit more, just go and watch the video to understand why I don't have much confidence in a small development versus large development. Okay, these are, in summary, these are some of the reasons why we have large transaction volume for large developments, because you have a lot of units buy selling, and then it's iconic because most likely if you ask people what is Lilium, they probably don't even know. But if you ask them what is Bartley Reach or Bartley Residences, they are more likely to know. Anyway, it doesn't have to be very, very nice facade. It just has to be big enough, and then there will be a word of mouth. There is a lot more facilities, maintenance is probably lower, and hence the price usually is also more competitive because you have more units to spread out for the developers to gain profit. Whereas small developments are not without their perks. They have privacy and exclusivity because you have the development is probably much quieter, much more peaceful. You don't have so many kids yelling, screaming around because you have less families. And then most of them are actually freehold. But in this case, for Bartley Vue, it is not. It is a 99-year. Later, I will talk about it again. And then, hence, since you have lesser people to argue with, you have a so-called bigger voice in management. Maybe you have a management decisions to make, and then there are not so many strong heads in the committee. And then, of course, if you want to go for en bloc, it's a little bit easier because you don't have so many people who may be fighting against you. Then again, I kind of struggled to find a comparable project that is a 99-year and also about 4,000 plus square meter size. And then I had to go a little bit further away until I can see Central View. For those of you who are looking at Cherry Gardens is 99, but the land is different. I think size, and then also they only have 46 units, so it is not really a fair comparison. If I want to find something that is around 100 units, because we want to be as apple comparison as possible, and then if I pull out Central View, actually Central View is slightly 3,000 square feet smaller than Bartley View, and units is slightly lesser by 11 units. So let's take a look at the price performance of Central View. But generally, I think they are quite similar in terms of characteristics. Went up to 2013, hit a peak, and then came down. Okay, and then it kind of stagnate at this level. So if you want that, transaction volume to pull up your price for you, it can be a little bit tougher. So let's talk about the maintenance fee. I think comparatively for RCR project, this is considered high for a 2-bedroom especially. But the good thing is that the 2-bedroom all the way to 3-bedroom premium are paying about the same every month before GST. it is considered high because there are some that are paying probably 200 plus to 300 comparatively in terms of same size and everything. Let's not talk about this lah. I think actually only $80 difference, not a lot lah. We can argue all we want lah. But at the end of the day, yes, I will say that it is a lot higher than usual, and this will turn away some buyers. But I don't think this is a major problem to worry about, because people can say, wow, it's $200. Maybe another developer is asking for 280, because this is a small development. So they have only 115 units to share the burden of maintaining the whole condo, and hence it is understandable that it's higher. I'm not trying to defend Bartley Vue over here. It's just that smaller developments, they tend to have to pay more in order to maintain the facilities. And if you compare a 280 typical and then use a 480, there will be a difference of $200 extra per month. Why I say it's not much of a problem. Yes, $200 is a lot a month, but if you compare 1 year, it's only 2,400. And then if we pull out our calculator, 2,400, and then you're going to stay there for 5 years, how much is it going to cost you? $12,000 extra. You may think $12,000 is a lot of money, right? But then now when you buy a property, the developer, they say they're going to increase price by 0.5% or maybe a little bit. You will be thinking, never mind, 10K, I can still buy. Okay. For those of you who are taking your own sweet time to go and decide, and then you wait low, and then guess what? The developer keep increasing price. Never mind, eventually when you decide to buy, they only increase about 10K, 15K. So my question is, if you are going to keep waiting, and then you say that this is expensive, then what's the logic? Because if the developers are going to increase of $15,000 and they are not willing to pay something like this for 5 years, which are going to cost you an extra of 12K, then what's the logic? You get what I mean? If developers are going to increase by 15K, and then you're going to pay, of course, higher maintenance fee for 5 years, in total 12K extra. And then just by waiting for maybe 1-2 months, and then developers increase the price by $15,000, how is that the logic? Aren't you actually paying more? It's just that you're paying upfront because you feel that it's lesser, because let's say you're paying a $1.5 million property, and then the development increases by 1%, which is very normal in today's market, because developers also need to eat. There are a lot of rising costs for construction and everything, a lot of delays, and hence this is expected. Okay. So I'm not, like I mentioned, I'm not trying to defend Bartley Vue's maintenance fee. I personally feel that it's high. I wouldn't also want to pay this amount. But I feel generally, if I compare to a macro point of view, if I compare to my future property appreciation, capital appreciation that I'm going to sell at what price, property price, then I think $200 a month is not going to be too much of a concern to me. So verdict is that for me, I think Bartley Vue is, if you want to buy for investment, then I don't think it is a good buy. Of course, let's wait a little bit lah. We have supply factor, which is okay, but then the thing is, it's a small development. Okay, if you are looking for exclusivity, you really like the light space, whatever, all this kind of thing, then okay, you can go. And if you are looking for a school, definitely we know already you can go. If you are looking for MRT, of course you can go. Oh yes, I think by now we should know that doesn't mean that near MRT you're gonna make money. Imagine again, let's go back to the chart. For those of them who got into, let's say, for example, Bartley, which they bought at 2017, till now, are they seeing any profits, even though they are near MRT? So I think that kind of proves a point. So let's not go down too much into this. Anyway, back to this. This is a small development, and hence you have the transaction volume that may not be as working in your favor if you are an investor. And also the maintenance fee could be some. It doesn't really bother me that much, but if you are an investor that is very particular on cash flow, then you may not want to consider this. And if you are talking about potential eventually going up, I think it is pretty much limited in my point of view. Why? Because I feel, based on my research, there is a hierarchy of properties that we can get into. assuming everything is the same, assuming okay, economic, what do you call it? Ceteris paribus. Okay, I can't remember what you call it. How do you spell it? This has been like 10 plus years since I had that exam, thankfully. So anyway, assuming age is the same as in within 2-3 years, and then location is the same, example side by side, and then what else? Every other aspect all the same. Okay, let's say land size and whatever size, layout, everything all the same. Assuming everything is the same, then the hierarchy, oh yes, most importantly, price is the same. Okay, then the hierarchy number 1 will be a freehold with large land. Then leasehold with large land. The third one will be freehold with small land. And then the last one will be a leasehold with small land. Why? Because you don't, like I mentioned in the other video about small and big developments, leasehold with small land. I mean, let's not talk about leasehold. Small land, you have a trouble trying to wow your guesses, and then if you don't have a wow factor, it's very hard for you to charge premium from your next buyer. And same goes for these two. And large land definitely will have a much bigger wow factor provided it's maintained well enough. And of course, leasehold versus freehold, no need to say, but in terms of large and small land, and they want to preserve the value, generally these guys have an advantage over these guys. But then again, it's also, like I mentioned, we are assuming that everything other things are the same. Assuming all 4 of them are selling to you at 1,005 PSF, which is not going to be a case, because most of the time these guys are going to be charging a way higher premium. For example, the most recent example will be Forex. Forex started at about 1,008, 1,009, I think. Actually 1,000 also have. But then day 3, they all were selling, last time they were selling as low as 1,005 to 1,006 PSF. So this, and they are pretty much almost side by side. And hence you can see a large land versus a small land, large land versus a large land freehold versus a large land leasehold. There is naturally a price difference. Okay, so there are a lot of other factors that we need to consider, but as a guideline, I will say, if you are talking about Bartley Vue versus Bartley Residences and Bartley Reach, all this, then it will be quite hard to fight, because remember, these guys, Bartley Vue, all these guys are buying lower than you, and then they are still charging now at the resale market lower than you. So how are you going to fight against them? So anyway, that is my point of view. You can still go ahead if you want. It's not like anyone is going to stop you. But I feel that if you are buying this place for investment, or you want to buy this place for the school, but you don't want to lose money, then you may have to think twice. Okay, sorry to burst a bubble for those of you who are still thinking, oh, finally it's something that TT recommends. It's not that I'm very pessimistic about the market. I'm still optimistic about the market, but I'm very particular about what we feel we can buy. Because it's like going to the stock market now. If you go to the stock market now, you realize that the stock market has risen a lot as a whole. But are there still opportunities? Yes. But is it that every single stock can buy? I don't think so. So you have to scrutinize what we have to buy, because I believe in every market there is an opportunity. And then are you going to jump into the opportunity, or are you just going to say, oh no, I missed out, so I don't think this is the right time? Ultimately, it's up to you. Okay, but are you going to wait? I think the thing is, are you going to sit back and wait, and then wait for so-called better opportunities? This just came out actually, I think yesterday or today, just came out on it. So what the government did was that, this is just a market update, a quick one. I think it will take less than 5 minutes. Government actually increased development charges for residential use, and most importantly for non-landed residences. That means for future condo. What this means is that, look at this part. What this means is that a higher DC development charges rates will add on to the development cost, because if, let's say, they want to tear down the building, let's say they want to en bloc, last time it was example 3 stories, and then now you want to build to 10 stories. Is the government just going to let you build? No one. The government, if you want to build from 3 stories to 10 stories, the government has to charge you money for that. It makes sense, right? If you want to benefit from buying a piece of land, then obviously the government needs to tax you a little bit on that lah. And it's not exactly a little bit actually. If you take a look, depending on which sector you are in, geographical sector you're in, and then which group of property you're in, of course, the town area, CBD area, all these, it will be more expensive. The RCR area will be more expensive. And all these are not cheap. Look at this, per square meter, they are charging this. So all these development charges are easily millions, tens of millions, 100 millions, which is not say I would say not say ridiculous lah, because ultimately it's all, when the developers sell to you hundreds of units, then you all will be spread up but it will eventually be passed on to you. But what this means, maybe a development, let's say Lentor is selling at 2,000, and then the neighboring unit maybe same, everything same, assuming everything same again, maybe they have to charge 2,100 PSM for the same exact thing because of the 10% increase. Okay, and also like what he mentioned over here, it will affect the block market, the collective sale market also, because it will cost more for them to intensify the land use. For example, International Plaza now it will be increasing 9.4% for DC, because now they are trying for en bloc, and their en bloc is not cheap. It's $1 billion and above. Okay. It shows that the government feels that it is still not really time to jam up the supply, because they are probably going to wait a little bit more. I think the last time they actually jam up the supply was here, which is 15,000. I think now we are probably nearer towards 17,000 or maybe even 16,000, I think soon. And what is a little bit more concerning is that you realize that every time they ramp up the supply through both GLS and also the en bloc market, what happens to the price? Okay, I think everyone knows from 2017 to 2018 what happened to property prices. And then we are near this dangerously low level. We cannot afford to go to zero, definitely for sure. The government has to ensure that there are new supply always in the market, because not everyone wants to go for resale. And it has to cater to everyone. Okay, and then there are people who are thinking, resale is a good bargain now. I mean, I don't disagree with that. But if I take a look at this chart over here, let's say you think that this is a bargain, I would say that, is this the right time? I would say, if I were you, I would think this is actually a better time, right? I think the most important thing, if you want to feel the market, you talk to the insiders. Who are the insiders? The agent on the ground, and then maybe even the developers. And then you realize that actually a lot of developers are running very, very, very low on land. A lot of them are just holding on to one upcoming piece of land, only one. So it will kind of panic. It will make them panic. And hence they are going to bid more aggressively on the prices. And also there are some people already asking me, emailing me, texting me about the Jalan Anak Bukit. They say it's so cheap. And then I also see a forum, people are saying about, it's going to be very cheap, 1,008. I seriously don't think so, because if it's going to be selling at 1,008, then there will be other developers who would have jumped in, because if they can afford to have such a low break even, then it doesn't make sense for other developers to sit out, because they are also running low on land. It must be something that is holding them back, because they also feel that it's getting very expensive, and hence eventually Far East managed to get that piece of land. Okay, so of course there are a lot of hearsay calculation here and there, but there are professionals who actually mention that there is a 75% rule for those people who are very, very into the Jalan Anak Bukit thing. Of course, whether you want to listen to hearsay from people who are not in the industry or versus somebody who is more reputable in the industry, I think it's a very straightforward thing lah. And then if you haven't realized, they realize that a lot of agents are actually committing to purchases themselves. An example, if you if you compare to the stock market, for example, and then a company insider go and starts buying their own stock, what does it mean? It means that they have confidence in the market, they have confidence in their company. And likewise, if an agent that is working as an insider in the industry, and then they start buying up properties now at this time when people think that it's a peak, don't you find it's a little bit, are they just buying for fun? Okay, that I will just leave it for you to think about it. So that's all for today. I think this is where we'll end today. And hence, any other queries, you can just feel free to text me, and then we have a discussion on that. Okay, that's all we have for today, and thank you. Bye-bye.